Hey there, future entrepreneurs. Welcome back to the channel where we break down complex business topics and make them easy to understand. Because let's face it, running a business is already complicated enough, right? But today, we're diving into one of the most talked about topics in the world of business formation, LLC versus S-Corp. So are you stuck wondering which is better for your new business? Should you go with the trusty LLC or jump into the world of S-corporations? Well, stick around because we've got all the answers for you. And hey, if you're new here, don't forget to hit that subscribe button, give us a thumbs up, and ring that notification bell so you don't miss out on more amazing business tips. Oh, and if you know anyone who's struggling with business structure, share this video with them. Trust me, they'll thank you later. So let's get into it. LLC versus S-Corp. What's the difference and why should you care? Let's find out. All right, before we dive into the showdown, let's first break down what an LLC is. LLC stands for Limited Liability Company, and it's one of the most popular business structures in the U.S. today. Why? Well, it combines the best of both worlds. An LLC offers the limited liability protection of a corporation while allowing the flexibility and ease of a sole proprietorship or partnership. Sounds pretty good, right? Let's break that down. With an LLC, your personal assets, like your house, car, or savings, are protected in case your business faces legal issues or debt. In other words, if someone sues your business, they can't come after your personal stuff unless you're doing something really shady. Don't do that. But here's where it gets really sweet. LLCs are super flexible when it comes to taxes. By default, LLCs are pass-through entities, meaning the business itself doesn't pay income taxes. Instead, the profits pass through to you and any other members who report them on their personal tax returns. That's a huge perk when it comes to avoiding double taxation. Less paperwork, less hassle. Who doesn't love that? Plus, if you're a one-person LLC, the IRS treats you as a sole proprietor, which means you're not bogged down by the corporate tax structure. You're just a regular old business owner doing your thing and filing your taxes like a champ. But wait, there's more. LLCs also offer flexibility in ownership. You can have one member or a whole group of them. And when it comes to management, LLCs give you the freedom to operate the business however you see fit. You don't have to deal with the formalities of a board of directors or annual meetings like you would with a corporation. It's all about keeping things simple and straightforward. All right. Now that we know what an LLC is, let's talk about S-Corp. The S-Corp sounds like it's straight out of a superhero movie, doesn't it? The mighty S-Corp, defender of tax savings. But what exactly is it? An S-Corp is a special tax status that a corporation or an LLC can elect to take with the IRS. So technically an S-Corp isn't really its own business structure. It's a tax classification. But it's one that can provide some serious tax advantages for small businesses. Here's the deal. Unlike an LLC, an S-Corp allows business owners to take a salary, and here's the kicker, pay themselves a reasonable salary while still taking profits in the form of distributions that are not subject to self-employment tax. In other words, the income from an S-Corp is taxed a little differently to help you keep more of what you earn. That's right. As an S-Corp, the business doesn't pay income taxes on its profits. Instead, the income passes through to the shareholders, just like an LLC. However, the owners, who are also employees, must pay themselves a reasonable salary, which is subject to payroll taxes like Social Security and Medicare. But the big win is that any additional profits that you distribute as dividends aren't subject to the 3% self-employment tax. Now that's a tax strategy worth considering, especially if you're making decent profits. Another bonus of an S-Corp is that it can help with raising capital. Unlike LLCs, which may have more limited access to funding, S-Corp can issue stock, which can make it easier to attract investors. This is a big deal if you're planning on growing your business or bringing in outside investors down the road. One more thing, S-Corp can only have 100 shareholders and all of them must be U.S. citizens or residents. So if you have a super popular international fan base and you're planning on going global, the S-Corp might not be the best choice for you. Now that we know the basics of both LLCs and S-Corp, it's time for the showdown. Let's compare these two business structures side by side and weigh the pros and cons. First up, let's talk about taxes. If you're looking to save on self-employment taxes, an S-Corp is your friend. The ability to pay yourself a salary and then take the rest as distributions could save you a bundle, especially if your business is profitable. An LLC, on the other hand, will have all of its profits taxed at your personal tax rate, and you'll pay self-employment tax on those profits. But don't get too excited about S-Corp just yet. There are some strings attached. For one, you need to pay yourself a reasonable salary. And if the IRS thinks you're being too generous with your distributions and not paying yourself enough salary, you could get into some trouble. You also need to deal with more paperwork, like payroll and filing additional forms. On the flip side, LLCs are far simpler when it comes to compliance. There's no salary requirement, no payroll taxes, and far fewer hoops to jump through. However, you may end up paying more in self-employment taxes if your business generates a lot of income. When it comes to ownership, LLCs win in the flexibility department. You can have as many or as few members as you want, and ownership can be shared in whatever way you choose. With an S-Corp, you can only have 100 shareholders, and all of them have to be U.S. residents. And while we're talking about raising capital, if you're planning on taking your business to the next level with investors, the S-Corp might be your best option because you can issue stock. LLCs can't issue stock. So raising capital can be trickier unless you're willing to take on partners or investors directly. So now that we've covered the key differences between LLCs and S-Corp, how do you know which is right for your business? Here's the bottom line. If you're a small business owner just starting out and you want to keep things simple, an LLC is a great choice. It's flexible, easy to manage, and gives you the protection you need without all the extra tax requirements. On the other hand, if your business is doing well, you're making a good amount of profit, and you want to save on taxes, consider electing S-Corp status. But keep in mind, it comes with more compliance, salary requirements, and paperwork. It's a bit more work, but the tax savings can be worth it. Remember, this is your business, and the structure you choose will shape how you operate and how much you pay in taxes. So take the time to evaluate your options and make the best decision for you. Well, that's it. Hopefully you now have a clearer understanding of LLCs and S-Corp, and you're ready to make the best decision for your business. If this video helped you out, hit that like button, subscribe to the channel for more helpful business tips, and share this video with someone who might be trying to figure out the best business structure for their new venture. Until next time, good luck with your business. And remember, it's not just about working hard, it's about working smart. See you in the next one.